Good morning, everybody, and welcome to a Wide View Wednesday. Fractionally delayed. Today's Thursday. It is March 27, 4:31 in the morning over on the East Coast. And I had promised you to get the Wide View Wednesday out yesterday. But due to the collapse of the markets yesterday, which just paid hand over fist, I wasn't able to get it done, so I'm getting it out to you today. And as we are heading into GDP, coming out at 8:30 in the morning today in another 4 hours, things are not looking good. And just to have note, because the minus 1%, plus 1% algo has been greatly accurate throughout the entire decline, prior to the decline, all of last year. We had a lower low at the open of futures this night, or late last night. So the plus 1% that I am going to be tracking for today is going to be on the ES at 57.87 using the lows overnight. So using it on the SPX from the close and the low yesterday, not accurate. Using it on the ES, accurate. Then we can make adjustments after that. With the 200-day moving average being our obvious resistance area if we can get it on the SPX. So let me get off of that and bring you quickly just to where we are on the SPX. Not going to spend time here, but I am going to point out to you how the highs of the week came in there on Tuesday. Highs of the week as of now at 57.86.95. The lows yesterday at 56.94.41, we have only produced a 92.54 point range. And as I said, you can go back as far back as you want to go. 100 points minimum is what you should be expecting. So I do not believe that the bottom is in for this week. And as I had shared with you, playing around with the Fibonacci spirals, going back to February 19th and the high, this is dead on accurate, counting this from the lows, the highs, the low, the high, the low, and March 25, together with your Bradley turn dates, being where the high should be placed, dead spot on, March 25. So, as I've pointed out, not being bullish, that April 15th is now starting to stick out as a major target area for where the next bottom should be coming in. So anyway, that is more than enough on that, and I will bring you on to last week's Wide View Wednesday, March 19th. Google, Amazon, Apple, Meta, Tesla. Again, we had a minus 1% day prior, so we were tracking where the plus 1% day was going to be on that day with the FOMC meeting happening that day. And actually, let's just go back and check out on some accuracy as to that. That was on March 19th, and on March 20th, 56.42. Did we get plus 1%? I do not remember, but it is here, 57.11. As the highs of the day on March. Oh, no, that was March 19th we were looking at. 57.15. Oh, look at that. Plus 1% FOMC day, 56.70. So, yeah, the algorithm is pretty damn good. Anyway, Google. I'm talking about Google. Can see Google possibly dipping a bit lower, 153, 149 before commencing the bounce, which should be the W5 of Wave 5 of Wave 3 and target for 235, 246. We can zone in on that possible upside when confirmed bottom is in, for which we can start Google recoveries above 175 and takes out 184. Well, we bring Google up. And not bad on Google. Not bad. Coming off Wednesday last week, not bad. Up to 171.28, but couldn't get above that 175. But nice little bounce there on Google. So back on to Apple with the massive respect for 208. Looking for the 200-day moving average first and foremost at 225, with the 50-day moving average well up in the low 230s, and with this looking at best as W4 of Wave 3. Apple could potentially see 285, potentially, which only commences after 238 and 250, which would be required to make that a real possibility. But the big point being the 200-day moving average first and foremost, 225. And we go over onto our Apple, which everybody knows. Apple, ba-bang, where did it go? 225, ba-bing, ba-ba-ba-boom. So we bring on into Meta, and again, I couldn't find a way to really be bullish on Meta, if you recall. No question, incredibly strong cluster of fibs protecting Meta from the 200-day moving average, just under over there at 574.66 low. So progress for 610, then 620, supports that 660, 680 as due to occur. We come on to our Meta, and we see Meta 633.88 before yesterday's dip. So 610, 620 worked out pretty damn good. And come back over here to the Tesla. 7 red weeks in a row. And like I said, I stand united, untied, it's supposed to be united, with myself that 208 is super strong and that the upside should be 313 minimum, with the steps needing to be tick, 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 tick. And we come on over here to our Tesla, 291.19. That's a big-ass fucking move that you got there from Wednesday on to 291.19. It's not a 50% move on the stock, but it is a goddamn good move if you bought the stock or if you played the calls. So anyway, that is going over last week, and where I am going this week, I will bring you on to now, is the frauds. Well, not really the frauds, but yeah, the frauds. So looking at Palantir, NVIDIA, AMD, and Micron. And yesterday, because of how aggressive everything was getting at the very beginning of the day, I only had an opportunity to get this email out, and I did not get a chance to do any trades on my own, only because there was so much going on in the room that my broader attention and requirement of that attention was dedicated to what was going on the Zero DTE chat, unable to go out there and be a peaceful walk in the park, playing a round of golf with no golf cart, walking the course, wider view kind of trade. And what I put out there for you, June 20th, Palantir 80 puts trading at 565, right at the open. June 20th, AMD 105 puts trading at 490. And I saw there Todd sent in a message. He was getting on a plane. He got into one of these trades. I don't recall exactly which one. And while he's on the plane, he's getting the Wi-Fi on. He checks his phone. He goes, fuck, I'm up 30% already. And he took the trade off. But what I shared with you in the email there were your wide view, daily standard, RSI only changed, looking at it and seeing how you are overbought on your daily. But then I put this little line going across, sideways, or whatever it is, horizontal, vertical, horizontal. And as you can see here on Palantir, it points out to 40.41. Over on AMD, same thing, extremely overbought. But I wasn't able to get a line on AMD only because the line doesn't go down that low. So I'll bring it on to the charts, and I will walk you through my wide view on these one by one, just like we did last week. So Palantir, wide view, looking at the weekly, and you are looking here at where you began, way back here in September of 2020. I recall a couple of people that were involved in Palantir. And Palantir having dropped down here well below the IPO open, down at 584, beginning part of 2023. So I had to start tracking it. I had to start watching it because there were a couple of people that were pretty involved in it. And then Palantir started getting that fucking oomph. So we've got a wave count, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 coming up here onto the highs, and I will bring you out onto a daily chart, 1 year daily. And yeah, as this just aggressively moved with the Trump or sorry, the beginning of the year, that big gap that we had there in February. If you remember, back on February 5th, after this big gap up, I took on the Palantir trade. And I took on a lot of shit for that Palantir trade. Because I got in on February 5th at $8. I got in the April 17th Palantir 100 puts. These dropped well below $3. Going into February 19th, the anniversary of COVID, 5-year anniversary, and then everything started to fall apart. Aunt Bunny fell down the stairs. My shoe! And that shoe fell off with this peaking up here at 25.83, plus 233% from where I got into the trade. But looking at the chart and looking at the structure of that move to the downside, it was pretty goddamn perfect because exactly as I said in the original trade, the target areas that I was looking for was being that gap fill over here at 83, then coming down here into that 76 region, 74. Perfect. Boom, boom, boom. So again, looking at this from the structure of what it is, I can see here a perfect AB, and without drawing them on the lines, I can see here a 1, 2, 3, 4, 5 move to the downside. Cookie cutter as far as it goes for a bearish drop. That being the A wave, just fractionally below the 100 extension of the AB, so C equals a little bit greater than A. And the bounce coming off of that, which comes back on here to what, 310. So let's get into a more zoomed in view. And the bounce coming off of that going dink, donk, dank. 100 extension being 96.45, coming right up there into that 98.17, which is the high that we got, which ties in with our big Fibonacci from back here, from back in 2024, 2025. And yesterday, well, not really yesterday, but yeah, yesterday you got a nice drop and you filled one gap, the one gap from over the weekend. One gap. My bigger, broader, wider view on Palantir is I see a strong possibility that over the wide view, you could make a move back down, not only below the current lows from back there in March, but down here below the January lows, new lows of the year, and into this region here, going back into the Trump gap, the big earnings gap, over here into this 45 area. So this is the reason why when I posted out the alert, I said that I was using the Palantir 80 puts using simply last week's low. Nothing more, nothing less. Is that what I said? Palantir 80s, or did I say the 85s? Let me go back and look. What did I put out there? So that, yeah, the 80 puts, 565. So if this does get that move down there to 45, you're obviously looking at this trade being a gigantic, enormous trade, but I don't want you to focus on that. You focus on the trade, and when you're oversold, and you expect to see your bounce. So next, I bring you on to NVIDIA. And NVIDIA, yeah, you look at this and you say, oh, God, what am I looking at here? Well, unfortunately, because NVIDIA's had all those stock splits, I had to go and redraw all of my drawings because we've been trading NVIDIA since back in 2016. So we've been doing this for 9 years, trading NVIDIA. And the thing just went absolutely bonkers after this 2023 just the creation of AI. Right back here in April, May of 2023, when they created AI. AI, nobody knew about it. Didn't fucking exist. And then all of a sudden, bang, they create AI. And here we are. This is what we're dealing with now. So zoom you out from here onto a more clean view. And yeah, coming out here since the beginning of 2023, which was down here at 49.30, and the absolute explosion into 2023, we got it pretty well charted out. So I am looking at this being the cycle 5 of this wave completely done. Wave 5 is done. It's in, it's done, it's complete, it's finished. Where do we go from here? That's the very, very good question. And what I see on this, looking at it from a little bit more of a zoomed in view, a very nice clean ABC for an A wave, right to around the 150 extension on the downside move there into February 3. The big bounce, which was incredible. You guys were in the room, those of you who were here. We were talking about this gap getting filled, the gap back up to 142, 141, whatever it was. Perfectly filled that gap, and now you have started to fall apart. So again, zooming in a little bit better on this, I see this very clean ABC for the A wave, a cleanish ABC for the B wave to the upside, and here we are with a 1, 2, 3, or 3, 161.8, worked out great. A 4 bounce right up to that 122 area, and now starting into our wave 5. The wave 5 that I am looking at, that I see, is NVIDIA could, should, and shall be seeing the August lows. Somewhere around there, around that 91, 90 area, just below 90. That's the expectation that I would have on NVIDIA, needing and requiring that to be breaking the lows from back, 2 weeks ago, back here around 112, 111. So getting down below 105, I would immediately start looking at 90, and that's the view that I have on NVIDIA. And knowing how big NVIDIA is as an impact to everything, as China banned them yesterday because they're fucking energy wasters, NVIDIA gets down to 90, QQQ's getting down into the 450s, 440s. AMD. So again, the alert went out there on AMD, and I will bring that back up for you so you understand. AMD 105 puts, because they're at 490, and the AMD chart, again, not able to draw the line that I was discussing, as you are extremely overbought going into yesterday and the trading session. AMD. So again, AMD, another one. We have been trading for the better part of 9 years, since 2016, since we began all of this, and looking at AMD from a big structure. Again, with the big lows coming in here in 2015 at $1.61, I can see the 1, the 2, excuse me, the bounce being the 1, 2, and the 3 for the wave 3 up here, and needing this to be the wave 4 that we're looking at before we can get the wave 5. But this wave 4 that we are currently in, and NVIDIA is a absolute piece of shit compared to everybody else. 227.30 over here, the all-time highs. It now, because it was supporting on minus 50% from the all-time highs, it's now resisting it. And that was, again, a reason why the alert went out. What I can see here with this AB, now 1, 2, 3, 4, and a 5 due to come, I can see NVIDIA or AMD making a move for the wave 5 down into this sub $70 area. Somewhere around the 66 to 58 area would fit perfectly. And that's what I'm looking at with AMD, and I can't see any reason to be bullish on AMD. None whatsoever. So I finish off here with Micron. And the reason I finish off here with Micron is for a couple of years, MK's been trading Micron quite often. And I've been watching Micron for quite a long time as well, because another one, we've been trading this since back around 2016. You had your 2009 bottom, your primary 1, primary 2, and off of that 2016 bottom, that was just incredible, the move that we were getting there in 2016 to 2018. Big 1, 2, here's a nice 3, nice little 4, and the final wave 5 completed for all of wave 3, and now looking at wave 4, trying to find its own bottom. Different count as to what we're looking at here, but again, with Micron, top coming in here back in June 2024. Big drop down there into July and September of 2024. And looking back here at a zoomed in view, since that drop took place back there, bottoming out around, let's call it August last year, this thing is just a swinger. Absolute swinger. Get up there above 100 into that 105 area, pull on the Micron chart. Get up into that 105, 110 area, and the short is massive to get that played back down there to 87. Get down there into that 87, the bounce is incredible to get back up to that 110 area. So I don't have a wide view to go trade on Micron, but I bring it to the attention to those who want to start learning it, start tracking it, start following it, because these better part of $25 swings that you're getting on Micron, an $87 stock moving $25 to the upside, that is ginormous. And, I'll even bring on here, where are we? Let me zoom this over. Micron. I don't think you can see this because I got the font too small. But you type it up on your own. And you look at Micron. Okay, here, example, May 16th. May 16th, we're looking at let's look at it, the 100 calls. The 100 calls would cost you $3. 2 months out. Not that I'm saying that that's a good trade. I'm not in any way, shape, or form saying it's a good trade. But your implied volatility is not that expensive, 60, 50, 48%. And like you look here at the April 4s. The April 4s, if you're looking at an at-the-money bounce here at 92, it costs you $2. If you were looking at an at-the-money put, it costs you $2, $2.50. This is a nice, cheap swing trader stock. And that's the reason I bring it to your attention, because not that I see a big play on this going out to June or September in either way, the calls or the puts. This is a swing traders you're in Las Vegas and you got a suitcase full of Viagra. This is that kind of a swing trade. So anyway, guys, that's what I got for you. We got GDP coming out later on. I will again keep this under wraps for a couple of weeks. And like I say, I hope that nobody's a little bit too bullish on Palantir or NVIDIA, because shit doesn't look good.